basically, I'm just going to show you my methods, my methodology, my ideology behind how I find stocks and everything, because it's pretty much impossible to look through, 100 stocks, hundreds of stocks, and research each one of them effectively. But you got to find some way to narrow down your scope of vision. Like, what are you looking for, and what are you going to target? So this is what I do. I end up looking through a website or a screener called finviz.com. So far, based on my research, this is one of the better ones. So finviz.com, you're going to go to, so if you get there, just going to walk you through this. Jeez. Finviz.com. And then you go to groups, and then you're going to find your target sector that you want to, spend money in. What are you going to want to target? What do you want to research? So I'll look at the recent history. I'll go through conglomerates, financial, industrial goods. These guys are looking like they're, uptrending. And then I'll look here, is that trend holding? Nope, conglomerates is going down, conglomerates is going down. Oh, conglomerates is going up by what, 0.3%? That's not good enough for me. So the overall trend right now is going down. Is it going to start doing its reversal today? Nobody knows. This is just the day's performance. So you can't really base the overall trend based on a day's performance. You can use this if you're an intraday trader, but I'm not. I'm doing swing tradings, which is I'm holding overnight. I'm holding, a few days, weeks, or whatever. So based on this, what I would target is probably technology, services, industrial goods, consumer goods, this kind of stuff, just for now. And after I figure out what sector I want to target, I'm going to go through the screener, if it would load. There we go. So the screener, here's your sector. Once you find the sector you want to target, then you choose it, whether it's basic material, technology, whatever, financial. The market cap that I usually go for is 2 billion under. Average volume, and there's a reason for that, I'll get into that later. The average volume I usually target is 400k up, and that's a volatility reduction technique. This doesn't mean that I stick to that rule. Sometimes I'll target stocks that have less volume than that, less average volume than that. If you still have a crap ton of pages, like, you're not going to go through 35 pages of this many stocks, that's going to take all day. So you can reduce that by looking at the average relative, or the relative volume based on this average. So maybe it's experiencing 1.5 times the amount right now, so this can, this can show that there's some good news happening. Something is making that stock appealing to traders. But you can leave that at 1.5 or leave it to any, whatever. Country, I usually do USA based because I don't like bothering with foreign affairs. It's always a good thing too, especially in the oil and gold and silver and all of that. A lot of industry, if you trade industry, this is really important to assess, what is driving the overall global economy. And technical, I usually skip fundamentals. I'll get into this some other time. But fundamentals is usually for long-term investing. And what I'll end up doing is I'll go to performance, and I'll set it to either a month or a week, usually by high to low. So whatever you prefer. And if I'm satisfied with the amount that I have, obviously I'm not going to scroll through 10 of them. I'm going to scroll through maybe 3 pages and, study up on them. And I'll hit snapshot and look through these. Do I like the pattern that's happening? Do I like what's going on here? What is the news? Why is it jumping up so high? What's happening? Bio, I usually tend to stay away from pharmaceuticals unless I'm tracking them very carefully. Let's say they have an APA approval pending. Then if it's pending and I caught it ahead of time, then I'm going to read through their study. Do they have statistical significance? That kind of stuff. You just have to research each one of these stocks. But you just scroll through, find something you like. Are they breaking the trend? Are they doing a reversal? Is there a stochastic rebound on the downtrend? What's going on? So you just scroll through all of these, and usually there'll be less, obviously. Like if I go over here, descriptive, and target, let's say, sector technology. I like technology just because, you know, that's one of my passions, so it's really easy to find stocks in it. So yeah, but usually don't target penny stocks. That volatility can end up screwing you. Price, I usually set to under 15 just because of what I've read on low price stocks that are above $1 or $2 or something like that. And you know, you just look through this, you find yourself a good pattern, you find your peak, you find your troughs, and you find something that you identify that you like. Is the pattern retraceable? Is it easy to follow? Is there news? Is the president or the CEO buying 100 shares on November? Is there a reason for that? Oh, well, how about that? He bought like right mid-November right here. Well, the stock went up because of that. So you can use this website to signal your purchases, you know. Okay, so after you identify what sector you're wanting to target, I typically look at the S&P 500, and the reason why I look at the S&P 500 is because they're the biggest 500 companies, or the market movers, if you will. So if they're going up, the rest of the market is going to be reacting to that, and the way they typically react is they follow the top 500. So on this day, you got a reversal that's going down. Not exactly a good time to be trading. Maybe you want to close out on some positions that aren't doing too good because they'll typically keep going down. You know, it really depends on what style of trading you're doing. You know, if someone's going to do investing for, you know, years or a couple of years or something, then this is not going to bother them. But I typically look at my stocks, you know, almost every day. So, you know, I would get out of a position and find a different position that is a little more favorable. So that's typically what I end up doing is I look at the S&P 500. You can look at different indexes, whether you're looking through gold or silver. You're going to want to look through those averaged index. You know, it really depends. So just do some Googling, find a ticker index for what sector you're targeting. You know, the Dow Jones 30, S&P 500, NASDAQ, New York Stock Exchange, whatever. You know, this is just going to help you narrow or reduce your risks of, you know, making a bad purchase or turning you off of a certain stock that could potentially be doing better in the future. You know, maybe everything is adding together and you just happen to buy on an overall downtrend in the market, you know. So if you bought that stock during an uptrend, it would have maybe done twice as good. Who knows, you know? So this is just a way to this is just a way to reduce your risks, is to buy on uptrends. All right, so let me show you all how to draw support and resistance lines, or channels, if you will. So let's take a look at FAST, just because this one I've been looking at for quite some time. And let's just draw a resistance line. The way you draw a resistance line or a support line is you find your peak and you find your valleys and you go, let's say this is your valley, A, B, C. That's all it is to it. And then you just do that. So right here I'm just pretending that I don't know the future. Right here I would assume that it would go down. Okay, just based on what I'm seeing here. Not much volume to indicate that it would go back up. You know, supports and resistance are only affirmed or statistically significant or increase the statistical significance if there's a lot of volume on these days. Especially, it just strengthens these lines. So if you have a crap ton of sell volume here, then it makes this resistance line even stronger. I'll get into the statistics later when I get into buy and sell signals. So as you can see, as it did, it went down and it went past this region. So if I were to extend these even more, you can see over here it started getting oversold for whatever reason. Maybe they had some news or something, but it bounced back up. And confirmation candle of it being unrejected or accepted. So, you know, you can follow these, and a lot of people will hold, or what I end up doing is I sell maybe 50% of my positions here and hold and wait for a confirmation whether it's going to go past the support or past the resistance and confirm support, or is it going to go back down. So obviously you expect it to go back down. You've got a pretty downward candle, and I'll go through candles in a different video. But you got a downward candle suggesting it will go down, and it's meeting support right here. Now, you can draw channels within a channel if you want to, if you're like holding positions for like 1 or 2 days or something. So you got this like that, and you can have another one like this if you want. Technically, they'll hold that position all the way up. They'll bounce within this channel and meet resistance, and then they'll bounce within a channel again. But these are way less statistically significant than these. The bigger the channel, the better. The overall, the bigger the data, in other words, the better the channel. Same thing's going on here. You have two congruent connections, if you will. Let me move this one back up here. So you have, let me draw horizontal, and this is why I thought this one was going to bump up a lot. So a couple months ago, I foresaw this going up a lot, only because you had compiling support lines. So you have this channel, this overall trend that's meeting this support, and this consolidation period, in which I'm wondering if it's during the Hillary versus Trump voting times. I suspect it is. I'm pretty sure it is. Anyway, so you've got this lateral consolidation right here. And once Trump got elected, the market is less uncertain. So, you know, there's more investing going on because, you know, now you know which direction-ish, you know what direction the country is going to head into. So now you've got this, you've got a massive candle breaking through the resistance here and breaking through this overall, this trend line here. Now this isn't statistically significant because it's way too small of a channel. There's no real data backing this up. But the more consolidation between these channels, the more statistically significant it becomes. So that about sums up, you know, how to draw channels. I mean, you can do this on basically any of them. Like, let's look at AMD for another example. AMD, whoops. Let's do, you got another one here. Let's go here to here. You got peak, you got what looks like is going to be a valley, and you got a valley, and you touch the valley right here. Same thing here. And that about sums that up, like so. Yeah, I'll show you all different techniques on how to do this, but another trick to keep in mind is support lines and resistance line are interchangeable, meaning if the resistance is broken through and is accepted, this resistance typically turns into the support. So it goes up, meets resistance somewhere. Usually it's because of some past price action or whatever it is, and it meets that resistance line, and if it's rejected, it'll go back down and meet this support line again. But in this case, because AMD is AMD and they've been doing really good right now in the CPU and GPU manufacturing and what they're targeting, whatever they're, you know, they've just been doing really good this year. They ended up bouncing off of this resistance line, turning this resistance line into a support line, and it goes back up, and it managed to get all the way up to $12. Another trick to keep in mind is there is psychological levels of resistance, meaning whole dollars and 50 cents. So they typically end up stopping at, let's say, $12 or $9.50 or $10.50 or whatever the case may be. So there's another one. This, because it's the tallest one, you simply just draw a lateral horizontal line of resistance. So your next point of resistance is going to be 12.42 roughly. Okay, so that about sums up most of channel creation and how to identify them. There's a bunch of different techniques where you combine volume and, there's just a ton of variables, but I'm going to stick to simplicity for now. So that about sums that up, and we'll move towards buy and sell signals here in a second. Okay, real quick, I just want to bring up later on today or this week or whenever I find some time, I'm going to go through a few buy signals. Those buy signals are going to be high and tight flags, pipe bottoms, inverted and ascending scallops, 3 rising valleys, rounding bottoms, descending triangles, ascending broadening wedge, even eve double bottoms, triple bottoms, head and shoulder bottoms, and different types of signals, just to name a few. There's a ton out there, but those are probably the most reliable ones that I've come across. So I'll just be showing you some of that and what are the parameters behind that.